Hello everyone. So in this weekly recap, I just wanted to update on management that I, for now, lowered my take profit to 2R. Okay, so why 2R and not 5 as before? First of all, it's so much easier on the mind, and it's much easier to catch the moves. And what's really important, if you are looking for 5R as your take profit, let's say entries here, then you will most likely need to wait a period of reaccumulation. Yes, some moves, they will go straight to the target, but many moves, they will go and make some pullback, some liquidity grabs before continuing to the take profits. And so, yeah, 2R is better. And also it allows more entry possibilities. So for instance, if for 5R, let's say, you need to enter only from here because the market will make a move and then come back. On 2R, you can enter even here or here if with a smaller stop loss, so more possibilities for entries. Yes, it requires significantly higher win rate, but that's a plus as well, because with 5R system I had like 20 or 23 or 25% win rate, and so a lot of losers and break-evens. So it's pretty hard to bear it, but with 2R it's better. So yeah, with that said, this is a technical recap of these first 2 days of this week. And let's start with USD GPY. So what we have on weekly, pretty bullish looking market. Why bullish? If we go from left to right, we see that there was some kind of accumulation here, which was confirmed with these bullish moves and created patterns of impulse, correction, more impulse, and now this is a pattern of, at this point of time, possible reaccumulation. And then with this impulse to the upside, it became more confirmed reaccumulation, a really long period of back and forth, then impulse correction again, a markup, and now again created this break. So this break is basically the same as here. This is a reaccumulation which started to be confirmed, and now we are looking to take this here. Unfortunately, many people will now look for shorts and for immediate reversal, but unfortunately most likely it will not happen, or will not happen in the way they expect. And what I mean by that, yes, maybe it could do something like this, so continue from here, but it will require a significant time for establishing at least some bearish movement, and it will be most likely like back and forth. So right now at this moment, the market is pretty bullish on the weekly. And if we look on the daily, we will see the same picture. So we will see, if we start from here, some kind of accumulation, so back and forth. We don't know what the market wants to do. Then it created a clear impulse to the upside, held the zone, and created one more impulse to the upside. At this point, accumulation is much more confirmed. Now we have some slowing down or impulse correction, and now impulse again with reaccumulation here and starting to build up. So yes, at this point it's a bit, just a little bit overextended probably, but while the momentum is holding, we can still expect this move to the upside. And so my bias based on these time frames was pretty bullish. 4 hours, as you can see, didn't start something like this. They started something like this, but not like this. So we don't have any big down moves. So bullish momentum is still holding. And even more, during the previous week, we created this relatively clear impulse on 2 hours, on 4 hours, and this really clear zone, which then got like wicked through, and the price snapped back into the zone. So I was looking to take out these highs. And so this is still Friday from the previous week, and this was Monday. at the beginning of London session, I just saw that so this was our target, and we are right before the break. Yeah, so a lot of liquidity is generated here after these moves. So even after these moves, like weak money is selling, 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 selling. So a lot of liquidity is generated. And now, basically, at this kind of markets, for me, only one side is worth taking risk, to the bullish side, until we get back in the range or prove that bearish stepped in into the market. 15 minutes basically the same, so impulse into the zone, like really weak impulse, then Asian range, and starting to break. And the entry idea was based on this. So the market was like ranging, and then created clear impulse to the upside on 1 minute, tapped into the zone, and somewhere around here came into the market. But after this candle, the entry was made, and it like started a push to the upside initial, but then started to fail a bit down. And I got pretty lucky on this trade that the price actually held this zone, and this zone is something I will probably address in some other videos. But look, what we have is this bigger zone, and now the price broke above this bigger zone and created this smaller fractal zone, hidden zone, and I call it connection zones. I see them often, and you see the price didn't came back to this zone, but it seems like the mitigation that was done with these orders now showed this reaction and now held. And I see it very often when these connection zones, they hold pretty much accurately. So after that, we started a move to the upside, and yeah, this is the time where I just basically got said that I changed the management, because during the Monday the price was just again naturally and expectedly blown up, but I didn't follow any of the next moves. But again, the logic with 2R management is that, okay, if you miss this, now you can maybe enter from here or even from here. So you have more possibilities for 2R entries. And actually, this trade, it ran in maximum favorable excursion to 10R. So I just recorded it in my journal, and then I reanalyzed my live journal every 500 trades or so, and I will see if it makes sense to come back to 5R. So it went for some kind of reaccumulation here and continued its up move. So I hope I explained why this was much more probable move than compared to the bearish side at the moment, if we are looking at the chart. And so then today I just continue to follow the bullish momentum. Unfortunately, you see the big difference between these two entries is that this entry was made before the break of the high, but this entry was already made after the move to the upside, and even after a little break to the upside again. And so of course this is pretty much overextended moves, and I made one entry from here and one entry from here, and that's all basically. So one winner, two losers. And also I had a trade on gold, which is based on this. And by the way, you see, this is a good exercise in itself, which you can do for any of your strategies, and I think I will record another video about it. Just go back through your days, even if you didn't have an entries, or when you had entries, you know, just go back and see how you traded, how what were your expectations, you know, and yeah, basically go from there, study how your strategy works out, and so on. So daily gold, so this was a short trade based on mostly this part of price action, okay? Because if we look at weekly, I mean, if we look at weekly, we could argue that we are in a big back and forth, so it's like 50-50 possible accumulation or distribution, but historically gold is of course bullish. However, as you can see, we still have some unmitigated zones to go. And again, I'm not saying I'm selling into the zones because it should go there, no. But I'm selling because we established some kind of bearishness, as you can see on daily. What kind of bearishness is this? These moves, mitigations, impulses, redistribution here. Impulse, yes, it's weaky, it's not perfect, but when this zone, basically you see this zone, if the market wants to continue to go bullish, should have held. But instead we went deeper, went a bit higher, and now continued its move to the upside. Let's look at how it looks on 4 hours. On 4 hours, it's again something like we saw on weekly, so I just skip it. But 1 hour, yes, again, not a perfect condition, but it started impulse to the downside, correction, impulse to the downside. We saw this zone, we have some move to the downside, impulse to the downside, impulse to the downside, and at last correction into the zone, into unmitigated zone. See, and so from here, main expectation was to continue lower this 1 hour bearish, local bearishness. 15 minutes looked like impulse correction with a bit of liquidity grab here, and then price started to fall. 5 minutes established bearish, with some impulse correction and possible impulse, and 1 minute was like this. So let me just show you from repeat standpoint. So it made some shifts to the bearish side, bearish side, bearish side. Relatively clean impulse, we could say, on 2 minutes. You see this impulse on 2 minutes. Relatively clean zone. And we have a move above the zone and then a quick snapback into the zone. So you see, it's like not the break of the zone. And like I was just expecting this move to the downside and was willing to take this risk. So the price didn't show too much movement in the beginning, but then reached, like slowly reached take profit, then went to the again there to the upside, and now we are looking to continue even lower. But it should be said that at this point, yes, some argument for overextension could be made. Okay, so this was the beginning of the week. And again, I recommend you to do something like this, go through days, see where the moves happen. So for example, some really nice bearish trend was here on GU. So I was not involved because, but you can say, okay, this is looking like really clean move, you know, really clean move. And you go and study how it looks on higher time frames, how it looks on lower time frames. How then market didn't come all the way to the zone, but created this push and continued from here, you know. So just study the market, and hopefully, yeah, because we are not only need to enter the market, mostly we need to study it and so refine our entries. Okay, share your comments, how you feel about the video. Was it interesting, was it not interesting, and then see you later.